Consumer price increases were down more than expected in May, and the Fed recently announced it was holding interest rates steady. What does it all mean for the current economy and economic conditions in the future? Joining us now is Danny Court, partner and senior economist at Elliott D. Pollock and Company. Good to have you in. Thanks for joining us.
Yeah, thanks for having me.
All right, consumer prices up 3.3% year to year in May. It's down from April, not all that much, but the increase is not as much. Good news?
It's a good data point. So month over month, it was zero. So that's always a good reading. That's one index, the CPI. The Fed likes to look at the PCE, the Personal Consumption Expenditure Index, as well. That's up about 2.6% year over year, and it also read 0% month over month. So a good starting point.
And monthly basis prices pretty much first time flat in a couple of years, huh?
Well, we had some flat months at the end of 2023, so okay. October, November, and that was that ill-fated announcement by the Fed that they said, oh, it's coming down. I think we'll have 3 rate cuts in 2024, and then we had another jump in January. So you can tell, by their recent history, they're going to wait for a couple more months of this kind of reading before they make a move.
I was going to say it's July, and we still haven't seen number 1, if not 3. But I'm going to get to the Fed in a second here, but sure. I want to get back to price. Is it gas? Is it homes? What's still kind of pushing inflation?
Pushing up inflation, yeah. The housing prices it's a little bit of an interesting formula in the inflation index, is that they impute what you would pay in rent for a house. So really, it's a look at what the rental market is doing, and that is going up. Prices still going up. Gas prices has been a bright spot in lowering inflation. We've seen year-over-year declines in gasoline prices, but healthcare costs have gone up, insurance costs have gone up. So it's a mixed bag as far as prices decreasing and increasing.
So outpacing overall inflation, sheltering costs, those things still more than inflation as a whole?
Yes, and again, it's kind of a volatile index month over month, but those are the ones that are pushing inflation up for now.
Well, I keep hearing that car insurance is up big time, and I'm trying to figure out why.
And I don't have a good answer for you either. But yes, we did notice that in the index. Insurance of all types have.
Oh, really?
Yeah, and that was the surprise in January. That was the one of the biggest categories that had a jump in costs and kept inflation high.
So let's get to the Fed holding steady. No cuts, but no increases. But again, as you mentioned, they were kind of promising all sorts of stuff here this year, and we haven't seen anything yet. What's going on?
Yeah, and you can chalk that up to economists love making forecasts that they love to revise every 6 weeks. So I wouldn't put too much weight on that. But yeah, the market did expect those interest rate cuts. The real estate market was really hoping for them. That would kind of loosen up the housing market, get some more buyers in here. But that's not the case. And the Fed has this twofold mission of full employment and low inflation. And we've had some really great employment numbers over the past 12 months. And that's given them the time. That's given them the patience to be able to keep fighting inflation and try to hit their 2% target.
But does it seems as though the economy is relatively steady after what we've been seeing the past few years, and yet the Fed is just still, is the Fed the reason the economy is steady right now? Are they doing a good balancing act?
They are benefiting from a really good employment market, a better than expected employment market where everyone worried about these high interest rates causing a recession, that businesses will pull back, that borrowing costs are higher, that, these development projects at low interest rates penciled out and at high interest rates they don't. And so that was the worry, is if we keep interest rates this high for this long, there's a chance of a hard landing, as opposed to what the Fed is saying is we want this soft landing where we're just lowering economic activity enough to get rid of job openings that don't even have a person working at them. If we can just reduce those openings and just kind of work at this balance. So they're just trying to get the labor supply and demand in balance and tamp down inflation. So because they have a good employment market, they can keep these interest rates high.
And that's why the Fed and the interest rates are. So I think a lot of people think interest rates and they initially think of mortgages and these sorts of things.
Sure.
But the Fed controlling interest rates the way it's doing, the impact on the entire economy is pretty doggone strong, is it not?
Yes, it is. They are encouraging saving right now. It's working. And we believe that the current the current policy that the Fed has is a good one for the long-term health of the economy. We want low inflation long-term.
What industries really want to see those cuts, and what industries are saying, I kind of like the way things are right now?
I think most industries would love an interest rate cut because consumers make up 70% of the economy. We love to borrow. If borrowing costs are low, we're going to spend more. But mostly it's the real estate industry. We see it here. We see it nationally. A 7% mortgage rate is just too high for someone that still remembers when they could get a 3% mortgage. And so we've seen we're still dramatically lower in terms of sales volume for resale homes. The new home market is actually improving this year here in Phoenix, so they're doing quite well because they can lower the interest rate. They can offer some teaser rates, get some buyers into the door, offer a 5% rate, as opposed to what the market is offering at 7%. So that's who's really anyone related to where you have to borrow. So
Yeah.
on the development side, a lot of apartments that used to pencil aren't penciling right now at these high interest rates, and so construction and real estate.
Last question real quickly here. Arizona compared to the country, how are we handling all this?
Our last reading in Phoenix was actually a lower inflation reading than the national average. When inflation was at its highest, Phoenix was even higher.
Yes.
So it's a good sign that Phoenix is on. We have generally lower inflation here locally than we do nationally.
Very good. Danny Court, Elliott D. Pollock and Company. Always a pleasure. Thank you, sir.
Thank you.